So this is Zack here with Brent from the Blockchain Founders Fund. Super glad to have you here talking about all things VC. We've talked to a lot of different VCs, always some of my favorite conversations. Before we get into it, can you give a little intro on yourself, who you are and what you're doing here?
Absolutely, man. Thanks for having me first off. And so I'm Brent. I'm a principal at Blockchain Founders Fund. We're an early stage Web3 venture capital fund, pre-seed, seed stage startups. We closed our second fund of $75 million back in December 2022. We've been very active in the space. We've deployed into about 140 startups over the last 4 years. As a principal of the fund, I work with the companies post-investment on fundraising and go-to-market strategies, and I lead a lot of our follow-on investments. So I can say I came from the Web2 space. I was in venture before, two Web2 funds, primarily that ran funds and syndicates. So I've seen the highs of you can raise a syndicate, $1 million in 2 weeks at the peak of the bull market. Crypto's rocking to the depths of the bear market, and literally my third day on the job at Blockchain Founders Fund was the FTX collapse in the US. And we've seen these cycles over the last like decade, but that was a real death knell for a lot of startups and fundraising. Yeah, and so I was at the time I was like, did I get into the right industry? Did I But no, since it's been honestly amazing. I mean, last year working with a lot of founders, getting a lot of rounds done. This year now it's just the complete opposite. I mean, even just from our perspective, from last year, the first quarter, we did about 10 deals. And then this year so far, we've done triple that. So it just shows you where the market's at, how fast deals are like moving. And, we're not back to kind of 2021 levels where it was just founders, if you ask them, can you see my data room? And they go, well, our round's closing tomorrow. So either are you in or are you out, right? We're not to that level yet, but it's definitely getting there. And it's a good thing to see for the community and for the Web3, crowd in just general.
That's incredible. And we've definitely seen the momentum come back. What is the catalyst for it?
That's if I knew the truth of that answer, maybe we would have a even bigger fund on our next fund, right? So that's always a $1 million question. But I think it's a couple main things, right? I think one, and for me coming from like the more Web2 world at first, in the US, it's like the S&P 500 is the kind of bellwether for the Web2 world. And then you have in crypto, you have Bitcoin that's kind of bellwether for everything, right? For startups, for fundraising, for whatnot. But obviously interest rates. And I think that's been an interesting thing I've noticed coming from the Web2 space primarily was, initially people were saying, oh, it's not correlated, but it very much is correlated. And so when the interest rates rose, we saw like that a major effect on crypto that in addition to Signature Bank and FTX and everything else that happened last year. But as we've seen with interest rates stabilizing in the US, that has been a catalyst for all investors because, it's a whole kind of food chain. If you think about, VCs invest in startups, angels invest in startups, but then, we get our money from the family offices, institutions, LPs in like that realm. And they're the ones that pay attention to, these type of signals, like where interest rates are and like how who's in charge, how the SEC is like leaning in on crypto versus not. So I'm very curious this year, like with how things go with the Bitcoin having, there's a lot of things going on this like year. It's an election year also. So interest rates to me are probably going to stabilize. Like they're not going to obviously raise them. If anything, they're going to lower them, which is also good for crypto. So that's why like right now, I mean, if you're a founder, if you're raising, if you're a venture fund, like now's the time, right? Even just from 5 months ago, it's been insane. I mean, I've had multiple founders that they had an AI component of their business and they go, should I change my narrative to an AI company? Because it's so hard to raise. So even if you have traction, even if you have revenue, and then now it's like the exact opposite. I mean, if you're a deep in company, you're in the RWA space, you're building on Bitcoin. I mean, you can raise $3 million like nothing. Whereas literally 5 months ago, November, October, it was the exact opposite. It was like very, very challenging to raise. So now's an amazing time to do that.
Absolutely. I think that's really interesting and cool to see. I mean, we're a bootstrap company, so we grew from 0 people to 51. But I think in a way we're VC funded because all the VCs fund the companies that hire us, and so I think that's really great to hear. Can you talk about your guys' investment thesis? And I think before we started this, you made a really cool point about how some VCs are, and I don't know if you're comfortable resharing this, but on their ivory towers, whatever, they're a bit separate from the community. And you said you guys are gonna do the exact opposite. And I was like, that's awesome. I'd love to hear more about that.
Yeah. Well, I should say, should I tackle what we like to invest in or the community part first? Okay.
Sorry, I asked 2 questions at once.
Yeah, no, it's all good. Okay, so on what we invest in, we kind of changed our model. I wouldn't say change our model, but about six months ago, we made deals very partner driven. So we have 3 partners at the fund: Ali, Mansoor, Toby, myself as a principal, where I work more on follow-on investments, like after we make our initial investments. We do like $200K initial checks up to $5 million in follow-on funding. And so each one of us has a different kind of thesis, right? I think that's what is interesting. And I think a lot of the venture funds do this also, where maybe some partners like more infrastructure plays, and like other partners maybe focus on tokens, and other partners focus on Web 2.5 as an example. And so that's how we're also kind of divided up, is like, well, I mean, we all have we overlap a lot in interest, but then again, if a partner really likes a deal and he wants to pursue it, he can pretty much do that. And so for me, I like to focus on more Web 2.5 deals, which is essentially a realm that, and I think a lot of founders in the space are kind of in that space, where you're not a full crypto company, you're not building on Bitcoin, you're not building on, Ethereum, but you're building on Near or something, but the kind of face and your customers are more Web 2 of your company. You don't fall into the category of investors that are very Web3 native, and a lot of founders would probably shake their heads when they say this, but you talk to a lot of Web3 VCs, they're so token focused.
They want the token.
When are you launching your token? When's the TG? When's the vesting schedule? And if you're a Web 2.5 company, you don't resonate. If you're like, well, this is an equity play, we might do a token down the road, they're not interested. Then you go to the Web 2 investors, and they're like, but you target Web 3 customers, or you're building on Near or something. And then it's like, well, they're kind of in this like middle space. And for me as a VC, I see it as a white space, where it's like, to me, if we're going to bring a lot of people from Web 2 to Web 3, there has to be a bridge. There has to be the interface for a lot of these companies has to be very easy for someone to use, whether it's like someone like ourselves or your 60-year-old grandma, right? Like, what can be so easy where it's just they can just like sign into something and start using it? So we made a few investments in that space. And then on the community side, that's been interesting because we just started that probably, I guess about a month ago at ETH Denver, where, again, last year events were dead.
We run ETH Denver.
Yeah, yeah, exactly.
We love ETH Denver.
And ETH Denver's an amazing event, but like last year it was a little rough. Consensus I went to last year was a little rough because again, it was just, we were in a bear market. People aren't as excited. Sponsorships are like down, right? And that's what like drives a lot of these events. Then this year, Bitcoin's up, Ethereum's up. ETH Denver this year was like rocking, and then Toby and I were just like, look, we'll host an event there, and we'll like start a community. Maybe we'll have like 100 people, right? Just keep it very simple. We don't have a grand crazy plan. It's just, hey, we'll just like bring people together, bring the VCs we know, founders we know, builders in the space, and that grew to a 700 person group. We ended up having over 1,000 signups. The event we had at Bar None, so shout out to them. That was amazing. He was an amazing host there. That was just, it was rocking. Like, we were at max capacity, and we were like, wow, okay, we have maybe something here. And then in our Telegram group, Toby and I posted every single day. We're very active. Like, we're not someone that's like, oh, well, we're VCs. We have a group. Let's just build a community manager. And that person can be like the kind of person to delete stuff and enforce rules. We're like, look, we want to interact with people. So DM us, message us. We get back to everybody. And of course, that's very time consuming. And that's why a lot of that's and like other VCs I talk to, they're like, how are you guys doing this? How are you managing your time? And I'm just like, look, I mean, the reality is we just don't sleep much, but that's fine. Sleep, you can catch them on that later. But in this type of market, when you want to bring people together, like, now's the like time, right? And timing is everything in life. And so we took that momentum to Dubai. And again, this group is probably 2.5 weeks old. We're at 3,300 members. And we've everyone from VCs, founders, the biggest funds, the smallest funds, the biggest, founders of billion-dollar companies, founders of pre-seed startups, just getting their first round. And I think when you provide guidelines for people in an environment where people can express their interests, they can express like what they're working on in a cool way, a no shilling way, which I know in the crypto world is hard, especially on Twitter and KOLs. It's all about shilling, but it's like you have to do it in an authentic way. And so in the group, and I post a lot about founders and how to present themselves, how to like post, how to communicate with investors, like how to come across as not needy, but come across as like, oh, this is an interesting company. This is like a hot deal, because fundraising is all about momentum, right? And getting interest in your company, just like for you, right? Like attracting talent to your company, attracting people to work with. It's all about, kind of at the top, right? And like, what's our narrative? What's our branding? What's our personality of our company? Then that spreads out and that attracts, right? It's kind of like your vibe attracts your tribe. Same thing with like companies, right? And so I think Toby and I have developed a community that people are okay with like doing that. They do it in a very cool way, and that just makes people want to join. And now our event we have next Wednesday has over 2,400 people signed up now. It's going to be at the in JBR Lock, Stock, and Barrel. And so we just want to bring as many, again, cool people together, have a good time. No shilling, but you'll meet a lot of cool people there.
That sounds absolutely epic. I hope I get the invite.
Of course, man.
Can you talk about how you like? Because I mean, they need to raise money,
Yeah,
but they can't chill.
Yeah.
And like I said, we're bootstrapped, so we've grown off of basically all these companies that have successfully raised. A lot of our clients, while we've with them, even in the last couple months, have raised $30+ million. So
yeah,
we've been with these companies as they've raised all this money. But it's not necessarily our side of the wheelhouse as much, because we're on the marketing and media. How do you present information without shilling it?
That's the $1 million question, right?
Yeah.
And so for me, in what I always try to do, because we have to do this too, right? When we raise money from funds, from family offices, from angels, institutions, it's the same principles. And so I've raised over $90 million for startups the last couple of years. I've worked at 2 different venture funds. And so it's the very similar vibes, right? So like I always tell founders, one, I have a whole process on how to like have a very tight blurb, six sentences. First sentence, what you do. Second sentence, traction. Third sentence, founders. Fourth sentence, raise terms. Fifth sentence, deck. And then sixth sentence would be your co-investors. But kind of having like a templated, like, here's how you present your company, very tight. You'd be surprised, right? I go, someone's like, hey, this is an interesting company. I'm like, great, send me their details, right? And you get this, and Toby and I call it these novels, or these like, I like to call these Game of Thrones novels, where it's just, it is so long and it's just like overly wordy. It's like, dude, just be tight. And so with founders, I go, look, you have to start, because again, you're in the weeds every day. And so when you're talking to yourself or your team, it's fine, but you're communicating to the outside world, to investors. Your one sentence has to be so tight. And sometimes, like some founders, I work with them for a month, 2 months to get that messaging down. Because again, when you're in the weeds every day, it's hard to do that. So first is like have a very like tight messaging. Second, just like I think what you're doing here is like you have to build a community. Just like for your company, just like for us, it's like you have to build a community of investors. And how do you do that? For like any principle in life, you bring value. So how do you bring value? You do a podcast, you host events, you host meetups, you bring, if you want to work with VCs, bring them a deal. Don't even talk about your company. Be like, hey, this is an interesting founder I met, think might be a good fit for you, right? It's like, and again, these are the same principles I do when I'm raising money also. It's like I'm meeting with a family office, and I know that maybe they invest $1 to $5 million or $500K plus, whatever the number is. I might go, what are your personal interests? What do you like to do? Oh, I like to go to the U.S. Maybe I want to go to this city. I go, hey, you know what? Actually, let me connect you to a few friends there. Let me connect you to someone there. But it's always like, how can we like bring value first? And then at some point they're going to ask you, what are you working on? What are you building? Like, oh, well, by the way, I have this company. Again, one sentence, what do we do? A couple traction points. We've crossed X amount of users, revenue. We're building these partnerships. Here's our co-investors. And then that opens a door in like a non-shilling way.
No, 100%. And I think that 6 sentence thing that you just learned here, we're going to break that down and put that in 6, because I think that's actually some really crazy alpha. So I think that, we should definitely kind of distill that down and have that be something that people take out of this. What is like the biggest red flag for you? Like if you see something like you're either close to signing a deal or whatever, you tell people, you're like, okay, like, well, like this look cool, but then something is said or something, and it's like red flag.
It's so funny. I literally made a post about this last week, but I'll give 2 examples, because I think you kind of mentioned the first is just meeting someone. So when you first meet them or you hear about their company, what is something that's like a turn on? I think my post the title was, what's a number one turnoff for VCs? And the second is when you're in diligence with like a founder. So I would say like first, and what I put was buzzwords, right? Get rid of the buzzwords, revolutionary, transformational, new, cutting edge technology, all these like terms, get rid of them. It's because you have to think again, when I think from LPs and I'm pitching to them, from VCs, the same thing. We look at 500 deals a month. We invest in 2 to 4, and that's actually kind of high. A lot of funds, especially lead check funds, they may do 1 deal a month. They may see 800 deals a month, right? And so you have to think about, from their perspective, they're seeing a lot. They're seeing like these same words on everyone's deck, and like another great example of that is like when I talk to founders, I go, look, we've spent all this money, we built this product, now we want to launch. And I go, well, what's your community? Who are you launching to? Oh, well, we haven't really started building that. We haven't really started working on that yet, but we're going to do these airdrop campaigns. We're going to partner with KOLs. And I'm like, you have to understand, that's what everybody says. So what is different, right, about what you guys are building on, what you're working on, who you're partnered with, how big is your Telegram community, how big is your Discord community, how often are you posting on socials? Like, these are like, again, like when I think about like red flags when I first like meet someone, like these are things that I think about. And then when you go through the diligence process towards the end, and this is what I work with founders on, is I call this kind of 3 parts to raising from VCs. The first part is, can you get meetings, right? And so for a lot of founders, especially if you're a first-time fundraiser, maybe your network's not big. And that's not I mean, of course, it's raising money, startups is always challenging. It's never not challenging. But if you don't have a network, okay, that's going to be a little more challenging. And so it's like, if you don't have that network, how do you get the network? And like I talked about, bringing like value, having a targeted list, throwing events, podcasts, starting to build that network. The second one is, once you have meetings, you go from first to second meeting easily. And so a lot of founders, maybe we make an intro to another fund, and the next week I go, hey, how was your meeting with that fund? And they go, it was good, but I haven't heard her back. I don't know next steps. And then and probably a lot of founders will roll their eyes at this. They just get ghosted, right? And then they DM the VC, they're like, hey, what's the status of my deal? Like, what's next steps? And then nothing, and then crickets, right? And to me, I don't think that's like cool, right? In the VC space. And I can say like, it does take a lot of time sometimes to get back to people. Like because again, from a VC perspective, if you're looking at 20 deals, maybe the one that's moving the fastest is what's going to get the attention. So if you're like, I'm just starting around, I've got 200K and I'm raising $1 million, I'll go, okay, maybe I'm not going to move that as like fast. But then if they're like, okay, we've got 90% of a round done, we're talking with 10 more VCs, the round's going to close next week, of course you prioritize that. But the thing is, like, if they don't have a next step for you, and they're not like, hey, we're going to put a diligence packet together, we're going to bring you to IC, then that's a problem. So then I help them diagnose where the issue's there. And then lastly is the diligence phase, which is, you've made it, you got the meeting, you made it past the first meeting, which again, most founders don't. Then you get to second, third meeting, partner meetings, goes to IC. And that's where you can get tripped up in diligence questions, right? As far as like, are your documents in order? Are your incorporation documents in order? Is your roadmap for your token launch, dialed in? Like, do you have your partnership agreements? Like, having all these kind of T's and I's dotted is like very, very key. And then they do like reference checks. So if you lied about something, that's another thing I talk to founders about. Don't be saying you've got this investor in, or don't be saying, oh, I'm talking to this investor or that, because then we're going to go ask them. If you tell me like blockchain founders capital here, they're based in Munich, and like we look at deals together all the time, and if they're like, yeah, I'm talking to them, I go, really? And I just, on the call, I'll just text them on Telegram. I was like, hey, you talking to the founder of this company? Like, what do you think of it? Boom, then get a response.
Of course, you guys talk to each other.
Yeah,
That's funny.
But it's crazy. But it happens fairly often. And to me, and again, this is like when we work with founders, it's like, what's their level of fundraising? Because again, if you haven't raised a lot of rounds, you haven't raised a bunch of money before, you might not know these things. And you're just think, oh, well, what does it hurt to just like maybe do like a little white lie where like, yeah, I'm talking to them, just try to FOMO investors in. But that's what I'm saying. There's an art to it, and there's a principles you have to like kind of follow.
And if you have good product, why you don't need to lie? Talk about it and get your people on board.
Well, exactly. And that's another red flag, right? And I mean, I totally forgot about this. This literally just happened 2 days ago on our IC. We were looking at a deal, and one of our partners was like, oh, this company's got so many users on X, and like, look how much in followers here on this platform. And then I go on to their Twitter. I keep wanting to say Twitter, even though it's X, but I think everybody's the same, but it's really hard to make that change. And it's like, you see the engagement, they have 50,000 followers, and then it's like their posts have like 100 views.
Bots.
Yeah, bots, exactly. And they're buying, and it's just like, guys, like why are you faking? If you have a good product, you have a good team, you have some traction, like why, like trying to do this fake it till you make it stuff, like that term, I think it's too loosely applied to stuff, and especially in Web3 and investing, it's like, it's easy to like spot that. It's not hard.
I'm so glad you said that, because I mean, as an agency, we run like 30 different Twitter's X's accounts.
Yeah.
From a bunch of major
all the time.
companies.
Yeah.
And, a lot of companies, we're working with them through the fundraising stages. Like I mentioned, we've been through several $30+ million raises with several companies we're working with, IONET, Block Lords, Cosmic Wire. And they don't bot their numbers. Like, but we've had companies come to us and they're like, well, can't we just buy some bots, like get the numbers up really quick to show investors? I'm like, guys, like it's like taking steroids or something.
Yeah.
Like you're juicing yourself up maybe, but like it's obvious it's not real, and over time it's just gonna hurt you. So don't do it. Like it's not helpful. And I'm so glad that we have someone on, like a VC saying this on camera, because I emphasize that to people all the time. And I think it's very, very hard for a lot of them to fall into those traps, because, you're getting 1,000 DMs saying like, oh, we can just blow your numbers up for a couple $100, get you all this fake engagement. And even if it's a good product, they may do this just because they're worried that they're not going to impress the investor by having the right numbers. So that's that's a really, really good point that you bring up there.
Yeah, man. I mean, I think there's, for founders, there's a lot of pressure, right? You're raising multiple rounds. Eventually you raise your last round. You're thinking about the next round. You want to get it together. You want to, impress investors as much as possible so you can get competition, so you can get a bigger round done. And I think that can sometimes skew and that's what I'm saying. Like for me, it's like, it's always about people, right? I mean, we have AI, we have crypto, but at the end of the day, people are building these companies, and like the founder's personality and how they manage that type of stress. And to your point, it's like, yeah, if they're looking for the short term, how to make a quick buck, how to just get quick followers, whereas like versus building it organically. I tell founders all the time, for me, I'm just like, again, if you're launching a token, it's maybe a different story because you have a shorter time horizon. But if you're building a company, I'm like, sometimes like Airbnb, it took them four years, right, to kind of get the product market fit right. And so I'm like, I'm never in a rush as a pre-seed investor to like get that right. Like, because if they do, like what you're referencing, where they're trying to get fake engagement, get fake followers, get fake community, dude, that's only going to screw you in the long term. Like, and if it does pan out where you can get like a fundraise done because of that, it's not going to get you to the next round, right? Because as you go up the food chain of investors and up to larger rounds, they do deeper diligence. I mean, dude, you're going to raise a bunch of money. You don't think they're going to like double check all these like things. And then again, that makes your deal look bad. And if they find that out, then you can't get the round done. Then you get in this weird position. We have to raise a bunch of these like bridge loans or take on venture debt. And that's where that like cycle of bad decision making kind of starts, is like short-term versus long-term optics. And I think in the Web3 space in general, a lot of people have made a lot of money very, very fast. If you really think about it, it's like,
it's insane.
Yeah. I mean, we think about like, where can you make millions of dollars within a couple years, or for some people in a couple months, or in a couple minutes for even some people, right? There's just not many places to like do it aside from gambling, straight up, right? And so when you think about like that, I think those perverse, it's like the Charlie Munger, show me the outcomes, or show me the incentives, I'll show you the outcomes. It's the same thing. It's like, that's fine if you're doing token, if you're doing meme coins, whatever, but if you're trying to build a company and like hire people and raise capital, it's like that mindset's not going to work.
100%. I think, just to talk about Genzio for a second, what we've done in Genzio is we've grown it very naturally from like nothing, basically just a couple people like me. I worked at Ripple, and when I was at Ripple, the founders of Ripple and stuff, I was there in 2019, so there's only 200 people there.
Yeah.
They would say the company's only as good as the people within the four walls, and people forget that. It's like the company is the build, like the walls, the people, and then the people within those walls, theoretically or whatever. And I was like, wow, that's like you don't think, even for a company like Ripple or whatever, it's like it's only as good as the weakest link, as whatever. So I think that's super interesting. And for us, it's about how we've grown as a company is perfecting services like social media management and video content, these different things, and then scaling them out. Because I don't want to just give a product out that's bad because then people are not going to come back and buy it again, and they're going to be pissed off.
Right.
You know, so we test these things out, make sure that our Twitter is really good, make sure our video is really good before we're going to go and sell it to others. And so we're in it for the long term. But I definitely agree with you that there's a lot of companies who come in, try to grab the cash and sort of extract value and then run away. Like I've been in crypto since like 2011. So I was
OG. Yeah.
I was a teenager when I got into Bitcoin. So it was I was super early adopter. And so I've seen like just these different brutal cycles that just wipe out entire ecosystems like Terra or FTX. So just these colossals kind of crash. I guess from your perspective, because that was really interesting. You said your third day, I think you said, was FTX was crashing. What was it like to be in that environment? Like, was everyone just like, well, like, you know, this is just another Mount Gox, like it's going to suck and things are going to come back? Did people bail out? Like, what was that sort of like? Yeah,
I mean, you know, it was a quasi D-Day in some sense. I mean, you just know, like, okay, this is one. I mean, that year was already kind of rough, right? And that was kind of like, okay, we're going to be in like a bear market in crypto. Like there was just no way, like no questions about that. Then SVB was a couple months later, Signature Bank. I mean, you know, so it's kind of like telling that there was more to come. But I think for us in particular, I was in Malaysia at the time because we're headquartered in Singapore, but we have a team house in Malaysia. So we were all there. And I remember waking up that morning and someone's like, dude, FTX is going down. And I'm like, wait, what? I'm like, you got Kevin O'Leary during commercials and like, I mean, Tom Brady at the Bahamas event. Yeah. I mean, you're like, dude, this is like the most, I mean, I think it was one of I forget what the commercial, the guy did the commercial.
Larry David.
Yeah. It was like, this is like the safest or you know, safest investment you can make or safest place to put your like money. And it's just like, for it to go from that to all these big names on it to then just like being a bankrupt company, it's like, this is insane. So I just knew coming from the Web 2 world, and I've been an investor in like Bitcoin the last like several years and Ethereum about 5 or 6 years. And so I've seen these like cycles, but I just knew like getting as a Web 3 investor, like full time, this is going to be a nightmare for our founders. This is going to be a nightmare for every founder, right? Because like, that's what I do. That's what I do. I work with founders. I invest in founders. I'm just like, they're going to be screwed because basically crypto in the US is going to that's a major death blow. Funding rounds are going to go down big time. The US government's the SEC is already very antagonistic, you know, with crypto companies. And so I'm like, and again, this is like any new technology is going to be boom and bust cycles. But when I saw that, I was like, okay, my work is cut out for me for this next year because all the founders I work with, it's going to be 10 times harder. And you're going to have to take twice as long to raise money. And you're going to have to probably do a lot more bridge rounds. And you're not going to, that Series A you're thinking about doing, forget about it. Push it back. Because in this market, you're not going to get that done. Unless you have crazy numbers. But even if you could raise a big round in that rounds last year compared to this year is not even close. I mean, we had a founder do a Series A last year, like a 30 cap, right? And now a 30 cap is like
nothing
now. It's like, that's like a seed company that maybe just launched, maybe.
Yeah.
Like, you know, you're even less. That's like,
like one investor.
Yeah, exactly. Yeah. Like in this space. So yeah, that was kind of my initial thinking. It was just I'm always thinking about founders and it's like, it's going to be brutal, which it was.
I love that you say you're always thinking about founders and like not companies. That's really cool to hear as a founder. What do you look for like in founders, and does it change as the company sort of gets up the rounds like seed? Because we've interviewed a lot of different VCs and they say like, pre-seed, it's sometimes it's more magic, more science, and then, you know, the science as it comes on. But I'd love to hear if you kind of agree with that or.
About if it's more science-based,
like they basically said like for very, very early stage companies, it's a little bit of magic because there's not a lot there, so you have to trust the founder a lot. And I don't know if you agree with that or.
It's I mean, there's a reason why a lot of VCs like playing like gambling or playing poker, because in some ways it's very similar, right? Because I mean, investing in a company, they maybe have a couple employees. They're maybe not even incorporated yet. They may just like are just opening their bank account, and you're giving them $200,000. I mean, that's much, you know, it's a down payment on a house. Like it's a lot of money, it's a lot of faith, and that's why when I'm saying with like founders about how you act and present, because these are all the things I look for. So there's basically like 50 things in my head I kind of look for subconsciously. And then if you trip a bunch of them, then I'm like, oh, this is probably, there's something weird about this or this. Because again, like I don't have much to go on. I mean, I can look at your product and I can look at your community and things like that. If you need a community, if you're a B2B company, it's different. And so like, what are we really going on? You're just going on the pitch of the founder, basically, and like how they're presenting the company. And seed is very similar. Obviously, Series A, it's different because you have more product market fit. You've got revenue. But yeah, like, and so that's why, like, to me, it's like, I think there's a lot of psychology in this also. I've also been a founder myself. I had an insurance company I sold in my early 20s. I was a partner in a law firm for several years. And so I've worked with a lot of different types of like people, and I've read a lot of books on it. I've gone to college for it. And so for me, it's like I bring that to this like business. And I think for a lot of founders, they can get tripped up on these like just kind of subconscious things at the very early stages. Again, when you send a blurb and you kind of over-explain your like company, and then the VC's like, oh, I don't know, he's already over-explaining it to me. But it's like, who else is in your round? And then they go, oh, I have no one else in, but we're just starting. And then boom, already as a founder, you're dead in the water. You're literally dead in the water. Doesn't even, I mean, unless you're like, we have $100 million revenue, but like, of course, at that stage you're not. But the point is like, you've already shot yourself in the foot by how you explained your company in the first 10 seconds. And I can tell that. Now, am I right every single time? Of course not. Do I make investments where I think it's a great investment, and then a year later I'm like, oh my God, I was like wrong, of course, but that's like the venture business. Like you're supposed to take swings and misses, but I always feel, I just don't ever want to feel bad about an investment where I'm like, ooh, I don't feel good about this. But then one of our other partners is like, we're going to do it. And I'm like, look, I don't maybe agree with that, but again, that's what you want to do. That's what you can like do. And that's why, like, even for me as an investor, I'm only going to promote deals to other VCs or founders that I know either I've invested in or I believe in. I'm not a VC that's going to be like, maybe we did other deals. I haven't worked with that founder. I didn't really like that deal. I'm not gonna like show that to other VCs.
It might be good for you.
Yeah, exactly. And even in the VC community, they know funds that shill startups, right? They're like, hey, invest in this like company because we invested in it. And then it's like, okay, well, tell me more about it. Like, why do you like it? And who's in this current round? And then you realize, oh, they invest in it, but it's kind of a stale deal and they can't get anyone else in. And again, that stale term is it's very, very, it sways, founders don't realize it sways VCs more than they think, right? It's like if a VC can sense a deal is like stale and it's not moving quickly, then boom, then already it's like, yeah, maybe I'll meet with them or maybe I'll think about it, right? But they're not going to be like, I want a meeting with them, right? And that's as a founder, that's what you want. You want when someone talks about your company, or if like in Paris Blockchain Week here, I met a lot of founders. A few of our founders were here also, and it's like, I hammer our founders on how to present, and then founders that I'm talking to, it's like, tell me what you're working on. I always say two things: tell me what you're working on, and then are you currently raising, and then tell me how your raise is going. And those three things generally tell me a lot about if I want to meet with them more or not. Just those things. And this is in a 30-second conversation. And what they don't realize, just like, again, it's me going to a family office event, I'm under the gun too. I mean, it's a casual environment. You're over coffee or something, you're meeting them, just bumping into them. But it's like you're basically on the gun for 30 seconds.
We have family offices as our clients too.
Yeah,
they're very chill, but
yeah,
I mean they're chill with us. But if you're asking them for money, it's different,
when they go to LP events, and then we're the startup, and we're trying to, hey, can I grab you your time for 10 minutes to talk about what we're doing, and it's like they're the same way. Like I'm walking out of Paris Blockchain Week last week, I'm like walking with my head down because I'm like you get bombarded, and you hear just a lot of bad pitches, a lot of bad etiquette on how to like fundraise. And then as a family office or VC, you're like, ooh, okay, I don't want to go to this like event, or I don't want to be like seen like too much because then you just get, mobbed about it. And so that's why, again, as a founder, you have to have, again, the pitch very tight, how you're raising again. And even and this is a question I get a lot, is like, if I haven't raised anything, how do I bring FOMO into my, company? And I'm like, well, first of all, you don't even start like, if you're asking me that question, you've already screwed up on raising.
Like, why are you raising?
Yeah, it's because like founders are like, I've been raising for 3 months. I couldn't get any investors in. I'm like, well, who are you talking to? What's your pipeline? Send me, what's your deck look like? What's your pitch? And it's all a mess. And it's like not targeted. It's not like we're going to target these specific VCs because we know they like. And that's what I was saying about like if you invest in like a Web 2, if you're a Web 2.5 investor, where you invest in these companies, or maybe they're building on near or different protocol, but they service like Web 2 customers. That's a weird fit, right? Because Web 3 VCs who are more token focused are like, it's too Web 2. Then Web 2 investors are like, nah, we don't like it because it has Web 3. And so I find a lot of great companies like in that kind of delta. And for a lot of them, it's like they have to have a very, very, very tight pitch and everything just to get like interest. And then I've found like once they do, and I had a founder just not too long ago, Resonance Security. When I first worked with him, we invested, Arca invested. He was having trouble getting traction. Worked with him for a month and a half. Then literally a month later, another big name VC out of Europe just came in and closed the like round. But that was all because I was like, you're over explaining things. I'm like, your deck is like very, very wordy. We cleaned it up and then got to like raise done faster. So it's like, it's not rocket science. And that's why I'm like, I have a lot of respect for founders because I'm like, building a company is very, very hard. It's very, very challenging. And there's a lot of things that can take your company out. Right?
Yeah, we have bias towards successful companies, so you only think about like the winners.
Yeah, you won't hear about the winners, but we made 140 investments. I can tell you, there's not 140 winners, right? But that's the venture business, and that's normal. And so I just want to make, how can I make founders' lives easier on the fundraise? Because that's the number one question I always get is just how do I shorten that window where I can get founders to raise within 3 to 4 months, or on average it takes you probably 6 to 10 months, or even longer depending on how much you're raising.
Who do you see kind of as the leaders in Web3 for fundraising? Like, yourself, that like there's Hashkey, there's Shima, there's a lot of different groups. Like who do you see as kind of like the leaders and who are like the trusted names? You see a name on there, you're like, okay, we think something might be cool here, or maybe none.
Yeah, you mean like other VCs?
Yeah.
I mean, of course, there's like the usual suspects, right? I mean, like you mentioned, A16, Sequoia, of course. But I think I would say even in the Web3 space, the VCs are also bifurcated on do you lead or not, and that's like a big also challenge I see a lot of founders ask me about is just like it's hard to get a lead, right? Raising on safes, pretty, it's a lot easier. You're not having someone set terms. You're not closing all the capital at like once in like a bigger round. And so in that space, like who leads rounds, that's a very small list of investors. You go to the AI space, there's a million funds that lead rounds. And Web3, I was looking at last year, I think in 2023, it was as of October, which in the last 2 months are also very slow rounds. But in October, I think I counted, there's only 4 funds last year that led more than 10 deals for the entire year.
Wow.
Which when you step back and think about that, you're like, dude, that's tiny.
Yeah, that is tiny.
You're basically talking about 4 funds that did like 60 lead deals for the whole Web3 industry. Right. Oh, Dragonflies, of course, in that group.
Yeah, they're in Seattle too.
Yeah,
that's right.
Yeah.
That's cool.
And so
you had him some.
Oh, really?
Podcast.
Oh, amazing. Yeah. No, they're great. And so it's like, because we're not a lead fund. Like we may co-lead if we come in early in a pre-seed, maybe like co-lead a seed round. But when you think we're going to do a $2-3 million check at that stage. That's a very small list of people. So yeah, that's how I tell founders. I'm like, look, if you can connect with leads, do that early, like have them like know you, like know who you are, because they're the people that, in our pre-seed round with $2-3 million, it's mainly safes. It's cool. But when you go up the food chain and raising larger rounds, you have to develop those relationships. And again, that's a very short list. So when you're like, who's better or not? I'm like, well, you want to get as much interest as possible, but in the Web3 space, it's so small, you can't really be super choosy about it because it's a very small list of investors that are going to lead crypto company rounds.
Awesome. So for people who kind of are watching this and want to become investors, just to kind of close here, what do you need to become an investor? Like, is there a certain financial threshold? Is there at what point can you say like, I'm an investor? Because I talk to a lot of people and they're like, I'm an investor. I'm like, okay, but
what does that mean?
Yeah.
Well, so is the question how to be an investor or how to be a VC or
either or
like general? Okay. I would say, on the VC side, it's very random. I've read the name of the book. It's a very popular VC book, but the one line that stuck out when I read this like 6 years ago was like, to get into VC is like getting through the back door, right? I mean, or the side window. Like there's no like, it's not like investment banking where it's like, oh, you go to school, you get your MBA, you're top of your class, and you go to investment banking, right? It's like venture is very random. It's like you maybe were a founder, maybe you were an investor, maybe you worked at a company that raised VC money and then they picked you, right? So like there's just a million different ways to like get in. I just tell on the VC side, I just tell people that ask us, so like, hey, you guys hiring? Or when we were hiring like last year, and I hired half our staff, how I got in, it was what I basically tell them is like, if you want to get in, bring value, right? Bring value. So when I got started like 4.5 years ago, I started writing investment memos for syndicates on AngelList. And I was like, look, I don't need cash. Just give me a cut of the carry or whatever of that particular deal, and I'll write your memo. And I wrote 45 of them, and I raised $19 million. But most people aren't going to do that because they have a full-time job, and they're like, well, if I don't get paid cash, I'm not going to do it. And these startups might not pay you for 5 or 10 years. But to me, I'm like, how bad do you want it? Do you want, and again, if you can, and that's like one thing I would say too, if you can write really, really well, it's very underrated. I ran MBA programs, interviewed a lot of MBAs. ChatGPT, especially now, yeah. ChatGPT writing, and it's like, just very strong writing skills, business and analytics skills. You can like write proper memos, and so that's how I got in. But again, like bring value. We just hired someone a month ago, and he brought in like very strong deals that when we he brought us like 5 deals. We invested in 2 of them, which is unheard of as like a quasi VC scout. We're like, dude, we should just hire you. Like crap, if you're bringing us like these deals that we like really like. So again, bring deals. If you can offer something where you're like, look, I can write for you. I can, create content. I can do whatever to get your foot in the like door. And then on the in investor side, there's a lot of platforms now where you can invest in like AngelList, crowdfunding sites. So there's ones for like, crypto also. That's a great way just to get your foot in the door. Invest, small amounts of money to get started. If you have more capital, you can do like angel investing. But I don't really recommend. I'm not a big fan of this movement about everyone should be an angel investor and let's teach you how to be an angel investor. And I'm like, look, this business is ruthless, right? The amount of companies that actually make it where you can make any amount of money is tiny. As a fund, we look at 500 deals plus a month. Even for us, it's very, very hard even to pick through all that. And like, we have a bunch of 100 plus LP relationships, 100 plus co-investor relationships, 140 founder relationships, managing all that and new deals. But we're professional. We do this for a living, and it's very hard. So if you're like, I have extra cash, I'm going to invest $5,000 checks into angel investing. I'm like, dude, that's super risky, and you're basically gambling. I mean, if you're basically saying I'm doing this to lose all my money to get experience, great. But like, don't even think about making money. Now, if you're like,
use all your money to make experience. Sounds nice.
Exactly. Yeah. So, but again, like I try to be honest because I'm like, I don't want to encourage people like to throw money into things where it's just like, dude, like this is not like, oh, I invested in Uber. I invested $5,000 in Uber and made $10 million, right? It's like, that's a very low chance. And like, just do crowdfunding. If you have a good friend that you like, maybe invest in like them that, has like a strong company, but don't get into this, like you came into some money to start blowing money on angel investing or just like probably in the token space, right? Like unless you're eating, living and breathing that every single day, you'll get wrecked in the meme coin space, altcoin space, token launches. Even for us as investors, right? We even get screwed sometimes on tokens, and we're the ones putting in large amounts of capital on a little. So it's still the wild west in some ways in like crypto, and just be like careful if you're going to be personally investing.
Awesome. Well, thank you so much for the interview. I really appreciate it. Make sure to follow Blockchain Founders Fund. Do you have your personal Twitter? You want to shout it out?
Sure. Yeah. Personal Twitter, Brent_Fulfer. My name, very, very simple. We're hosting an event in Dubai during Token 2049 on Wednesday, Lock, Stock, and Barrel, 7 p.m. Please come by. It's going to be great. We have 2,000 plus people there. And man, look forward to seeing you there in Dubai also. It's going to be an epic week.
Let's go. Thank you so much. We always appreciate different founders and VCs taking the time. Honestly, the insights that you share are extremely valuable to the people who watch them. So thank you. It makes a huge impact. Thank you so much for your time, and chat with you guys soon.
Awesome. See you guys.
Cheers.